I'm going to go back to Tesla here. Maybe get your thoughts on the stock. So we do have this report of Elon potentially.
I'm not a seller of Tesla. I think that he wins the vote and stock goes higher.
Some breaking news. Musk has taken to X, you'll be surprised to hear, explaining that reports around him directing the shift of H100s that were destined from Tesla to X or XAI were for a very logical reason. Tesla had nowhere to put them. Craig.
Yeah, it maybe stands to some reason, Ed, because you reported just in the last few weeks that Tesla was running behind on building data centers. They're standing these up in Buffalo and in Austin, Texas, where they have their big factory. But this is a case still of an indication within NVIDIA that they're sort of looking askance at some of the things that Musk has been saying about a really important aspect of Tesla's business. This is, after all, sort of where he's steering this company is to self-driving and AI, and really trying to play up that aspect of what Tesla is working on as the fundamental car business really is struggling for the company. So for him to have to address a report like this in the midst of a slowdown in EV demand and this big pivot that he's making toward AI and self-driving development, it's not particularly reassuring if you're a shareholder.
The host of CNBC's Mad Money, Jim Cramer, recently told investors to not sell Tesla as he expects the stock to go higher once Tesla shareholders approve Elon Musk's pay package at the company's upcoming annual meeting. Funnily enough, Elon tweeted about this, referencing the ongoing joke that any time Cramer says something, the opposite happens. But I have to say that I don't see inverse Cramer working this time, as Elon just revealed some incredible news for Tesla investors, which proved that there's still a massive upside to Tesla stock, even as investors worry about his involvement in multiple businesses. So, in today's video, we're going to explore Elon's bullish comments and disprove some bearish analysts. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
All right, welcome back. We have some interesting developments from the world of Elon Musk because, of course we do. CNBC publishing a scoop that Elon Musk had directed NVIDIA to ship thousands of semiconductors that were meant for Tesla to instead be sent to X and XAI, those, of course, two other companies that Musk owns. And guess what? Musk responded to the article. He said on X that he simply made the change because Tesla does not have the physical space to store all the chips that were ordered. Apparently, he also didn't like the article. Anyway, given Musk's investment in his business empire, is he favoring maybe other companies, other babies, over Tesla? Joining us now is Gerber Kawasaki President and CEO Ross Gerber. I mean, listen, we'll take any just boring story that would be boring any other day. When you add Elon Musk's name to it, it instantly becomes interesting. Do you have a hot take on this scoop?
I mean, you had the hot take on the scoop. I mean, I'm waking up and reading your article. That's obviously new information and a continuation.
It wasn't mine. It was Laura Kolodny. And Musk,
right. Well,
Musk kind of name-checked
Laura,
her
because
he wasn't happy with the article.
Yeah, no, but I mean, obviously it was true because he responded to it, and whatever take you want to make of it or whatever Elon's thinking, isn't really what I'm trying to do. I'm an investor in Tesla, so it doesn't feel good because I've walked Gigafactory Austin and it's like 17 miles long or something.
Yeah.
To say that you don't have room for something is a weird excuse for the biggest factory I've ever seen ever. But that said, there's a lot of work that needs to be done at Tesla, just the day-to-day stuff. My dad bought a Tesla. He can't seem to get it. My chief compliance officer bought a Tesla. She's having trouble getting it. They're short-staffed. People want their cars. So yeah, Tesla's kind of the bottom of the pecking hole of Elon's companies.
At this point, asking Ross Gerber about Tesla is like asking a vegan to grill your steak. Elon saying that Tesla had no place to send the NVIDIA chips to turn them on actually makes perfect sense, and this was proven by Tim Zuman, Tesla's former head of AI infra. Zuman tweeted that just taking delivery of thousands of GPUs is a crazy military operation, even before any racking, stacking, and cabling all bring up. And to put it in simpler terms, there are a lot of things to consider when it comes to buying GPUs, and Ross Gerber simply wasn't thinking about any of them when he made these comments. We also have Wedbush Securities' Dan Ives pointing this out, saying that he strongly disagrees with Gerber's bearish Tesla take. Additionally, Elon said that Tesla is planning to spend $3 to $4 billion on buying chips from NVIDIA this year, so the concerns about Elon ignoring Tesla's compute and AI needs in favor of his other companies shouldn't be taken seriously. But this isn't the only positive piece of news that Elon dropped on Tesla, as he actually said that the automaker might surpass NVIDIA when it comes to AI, and we're going to go through his comments right now. Hello everyone, and welcome back to Investocracy. In a recent tweet, Elon Musk said that out of the roughly $10 billion in AI-related expenditures he said Tesla would make this year, about half is internal, primarily the Tesla-designed AI inference computer and sensors present in all of its cars, plus Dojo. And when he was asked about how Dojo compares to the NVIDIA cluster and whether he saw a realistic pathway to producing training compute internally rather than buying from NVIDIA one day, he said that training compute for Tesla is relatively small compared to inference compute, as the latter scales linearly with size of fleet. Elon added that perhaps the best way to think about it is in terms of power consumption. When the Tesla fleet reaches 100 million vehicles, peak power consumption of AI hardware in cars will be around 100 million gigawatts, while training power consumption will probably be less than 5 gigawatts, but Elon said that these are very rough guesses. He adds that obviously 5 gigawatts of AI training compute is enormous by current standards, but is only about 5% of total Tesla AI compute, and that there is a path for Dojo to actually exceed NVIDIA. It's a long shot, but success is one of the possible outcomes. It's very likely that inference for all AI applications will dwarf training due to the scale of inference needs, and Tesla will leverage inference arbitrage from their edge compute platforms, aka their cars and human bots, to help the company and Tesla owners do a lot of inference, help society fulfill its AI appetite, and make a lot of money.
When I think about Tesla, especially right now, considering, I mean, if you look at the last 5 years, the stock is still up over 1,300%. It's really had a bad year price-wise, but it's also had a bad year from an earnings growth standpoint, where EBITDA actually contracted in sales from a automotive standpoint. We're down last quarter compared to the same quarter for the previous year. So I think Tesla going forward is going to be all about licensing its FSD, or full self-driving technologies, which again, they are a leader. If you look at the cumulative miles driven in terms of data collection for FSD, you know, we talk about artificial intelligence and large learning language models, or LLMs. Tesla's a leader in this because they've collected huge amounts of data over the past 5 or 6 years. They keep delaying their full self-driving. They're on version 12. It's still under beta testing. But I think, looking at the stock, it's trying to find a base. Obviously, it looks like from an earnings standpoint, it's starting to base. And it looks like potentially going into August, they'll be launching the first version of the robo-taxi. So I think that's going to be a catalyst for the stock, essentially for its ability to expand in terms of its multiple. Because we've looked at NVIDIA, it's been a tremendous, productivity gain that is being priced in for NVIDIA and artificial intelligence. You have to think about autonomous driving. That's a massive productivity gain. And I think Tesla is going to be the primary beneficiary of it.
When speculating about the outcome of nearer-term drivers for Tesla stock, investors often lose sight of the veritable fundamental progress that Tesla is achieving, even amid a difficult operating environment. With the stock down nearly 30% year-to-date, we see an opportunity for investors to load up here. And if the shareholders' vote ends up going south, investors can buy even more shares if Tesla stock drops. Tesla's margins were greatly impacted by the price cuts that the company started to compete with companies that make cheaper alternatives to its vehicles, like BYD, and these price cuts have always triggered a violent investor reaction. However, amid these price cuts, we saw in Tesla's Q1 results that the company has achieved sequential gross margin stabilization. Quarter 1 gross margins of 17.4% fell 2 points year-over-year, compared to an 8-point year-over-year reduction in Quarter 4, and fell only 20 basis points sequentially from Quarter 4 as well. There are a number of positive drivers for a recovery in gross margin, over and above vehicle production efficiencies, that will be naturally gained over time. It's worth noting that Tesla has recently initiated free FSD trials to buyers of new Teslas as well as existing Tesla holders starting in March to encourage more adoption of the $8,000 feature. Additionally, in a number of markets worldwide, FSD is now available as a $99 per month subscription, which is substantially less of a barrier to entry than an $8,000 sticker price. Consumers are more used to a subscription model, and many big-ticket purchases have also shifted to a monthly payments model. So, the rollout of both free trials and subscription pricing will boost Tesla's FSD attach rates on new vehicles, which is essentially a free lever to gross margin leverage. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
George, the title of my question is Teardrops and Tidal Waves. Why should a Tesla investor care about this report? It came out of CNBC that they're moving inventory from one business to another. If nothing else, don't we trust Elon Musk to make the best decisions for the slew of companies that he owns? And all things considered, he's been a good steward of all these companies doing the best job. Why do we care about the minutia? And by the way, why is an NVIDIA email being leaked to the media?
Well, I think if you look at this news, it's news. I don't think it's really meaningful from the standpoint of Tesla or X in terms of allocating capital or physical capital in this case that Elon Musk has or his group of companies has in terms of their NVIDIA chips. I think it's more of a headline. You know, obviously headlines are being generated because of AI, NVIDIA, and I think that's what it is. Other than that, I don't think it's really meaningful, to be honest with you.
Exactly.
I think, you know, looking at Tesla, the total automotive sales, you know, when it comes down to the competition we're seeing, especially in China, that's not necessarily a bad thing either. I think for lower price points has been a strategy. They've cut into their margins because of lower price points. But ideally speaking, the catalyst for Tesla, at least in my view, is autonomous driving, because they'll be licensing their technology to other major manufacturers like Volkswagen, Toyota. I mean, these are companies which produce over 10 million units each on a global basis versus Tesla's 2 million units. So I think this is a headline, to be honest with you, and I think the headlines around automotive sales are already priced into the stock. I'm looking for the next catalyst, which I think may be in August. So I think that's something to keep in mind.
How about the June 13th investor meeting where they're going to vote on his pay package?
Yeah.
Might be a small mover there, too.
For sure. All right.
We think that Tesla deserves some applause for speeding up the expected launch of its next generation of affordable vehicles. We know by now that the EV maker believes itself to be in between two major growth phases, the second of which will be unleashed when cheaper cars are available on the market. The company notes that it expects to begin production of these new vehicles by early 2025, and it has existing installed capacity to grow vehicle volumes at least 50% above 2023 levels when these new vehicles come online before investing in any new manufacturing lines. So right now, the gross margins we're observing have idle costs embedded that are being reserved for these new vehicles. Finally, we can say that if we judge Tesla on its near-term earnings metrics, many might consider the stock to be expensive when compared to the broader market. But when you think about the longer-term context with new technologies and products like FSD and robotaxis, you'd see that Tesla actually trades at reasonable levels right now. So the current dip is definitely a buying opportunity for investors who believe in Tesla and Elon's vision for the company. But what do you think about Tesla stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.